Q1 GDP, that's on everyone's radar. Those growth figures are set to release. What kind of numbers are analysts and bankers and economists penciling in? What are the factors that are going to be impacting the growth this quarter? Gaurav is here with that analysis.
Well, the official numbers of India's GDP growth are going to come. And when we talk about the expectations, now experts believe that India's GDP could register a growth of around 6.9% in this quarter, whereas some estimates go even as low as 6%. Now, this will be a little lower than the RBI's expectation of around 7.1% growth in this quarter and significantly lower if we compare it with the previous quarter. Now, there are three reasons why experts believe that this quarter could be a little softer for India's GDP growth. The first one is that the industry segment growth. Now, we know that elections were there in Q1 FY25, and at the same time there was an imposition of the code of conduct, and that is the reason why we saw a lagged government spending in this quarter. Apart from that, June is usually a seasonally weak quarter when we compare it with other quarters. And lastly, high frequency data also suggests some kind of slowdown in the economic activities. So it suggests that slowdown is there in the sales growth in the manufacturing companies. Urban consumer confidence was also low, which was a little surprising for the month of May. And when we talk about construction sector, there also we saw some kind of slowdown. Now recently, let's also not forget that Goldman Sachs also cut down its GDP estimates for India for the next 2 years, almost by 20 basis points, and this was owing to a contraction in the spending of the union government. But on the contrary, experts also believe that in this quarter we may see some positive uptick coming up in the agri segment, and services sector as always has been strong for India. So that makes a case of some higher number which may come out for India's GDP growth. Let's also not forget that historically, if you look at the trend of GDP data, India has surpassed almost GDP expectation almost in the last 6 out of 8 quarters when we compare it with the expectation. So last quarter, if we have to name, expectation was at 6.7% while the actual number came at 7.8%. So definitely watching out on how the actual numbers comes out, as actually when we talk about industry expert, they are expecting some kind of soft quarter when it comes to GDP number in this quarter.
All right, that's the expectation when it comes to the overall GDP print. And we've also got Sonal Varma joining in. She's Chief Economist, India and Asia ex-Japan, Nomura. Thanks so much for taking time out. A 5-quarter low is what the expectation is. Do you think that, the global slowdown in any way or even elections have played Spoilsport?
Yeah, hi. I think not the global slowdown impact. There are three different factors, I would say, that are playing a role. So our own expectation is GDP growth at around 6.8%. One is actually just adverse base effects are at play, which is more technical. There are two what we would call transitory factors that are weighing on growth. One is the election-related low spending because of the code of conduct. And second, there was a heat wave actually, and that did dampen consumption in that particular quarter. But I think there are also a few factors that may be more persistent, which are also reflected in this softer number. One is the lower commodity prices, which were a big tailwind for firms in terms of high corporate profitability. That is starting to reverse, so that's going to reflect in this number. And two, and this is something that we think is going to play out further in the coming quarters, is a slowdown in credit growth, which we think is going to weigh on the GVA number for the financial services sector. So it's a mix of many factors, I would say, some transitory, some not so transitory. So the key takeaway for us really is going to be to what extent some of these trends are going to extend beyond Q1.
What's the figure that you're working with? And I ask because while the ET Now poll is penciling in a figure of 6.9%, there are estimates out there on the street as low as 6% as well for the quarter. And all this comes just a day after Moody's actually boosting the GDP forecast to 7.25%, although that's for the full year.
Yeah, so our own estimate is 6.8% for GDP growth. We've seen in the last 2-3 quarters a big variance actually between GDP growth and GVA growth. One is sort of from the demand side, the other is from the supply side. And we do think the GVA growth is going to continue to be much softer than what the GDP numbers are. So compared to the GDP number, our GVA growth estimate is around 6.1%. We would be surprised if the GDP number is closer to 6%. I think that's something that the GVA might be, but GDP we think should be closer to 7%.
And do you sense, Sonal, that this is going to resurrect in the next quarter as the government spending starts to trickle back? Or do you think it will continue to be on the lower end and continue to weigh heavy on the GVA and the GDP numbers?
Broadly speaking, the transitory factors, of course, will reverse. So government spending is going to pick up, heat waves, going to get over, so consumption should normalize. But the factors that are a bit more longer lasting in our view is the moderation in corporate profitability, the moderation in consumer credit, which we do think is going to weigh on urban consumption demand and partly offset the revival we are seeing on the rural consumption side. The global factors, I think, is the biggest risk factor to watch over the next 6 to 12 months. We've seen, some shake in terms of the U.S. employment situation. As of now, it still looks a moderation rather than a big slowdown in US growth, but that could potentially be something of a risk we need to monitor. So our own assessment for FY25 is GDP growth is likely to moderate. We're looking at around 6.9% for the full financial year FY25. And at the margin, I would say like FY25, as the second half of FY25, we think will be slightly softer as some of these more persistent components of growth start to play a bigger role.
Okay, and I wanted to understand your take, Sonal, as well as to what the outlook or the expectation is when it comes to rural recovery. Do you think that that's on track?
There is an improvement that is visible in rural segments, and we think that's largely because of the decline in inflation, which is helping boost real rural incomes. And of course, the progress on monsoon should help as well. That said, I think some of the more structural drivers of rural incomes historically, like a revival in rural job creation, significant increase in land prices, factors that lift rural terms of trade. We don't think some of those factors are at play as of now. So bottom line is, yes, there is a rural recovery, but it's still relatively subdued, I would say, compared to what we are used to in the past 10 years.
Okay, fair enough. And what's the expectation then going down the line in terms of the GDP growth print and how we will stack up versus some of the other emerging market economies?
You're right. So, as I mentioned, our projection for this financial year is 6.9%. And for FY26, our projection at this stage is around 7%, although we see some downside risk to that. I think in the global EM context, India still looks quite strong in terms of the relative growth prospects, but I think also importantly in terms of the macro fundamentals. So if we do see a US soft landing, then that could actually be a positive for India in terms of an economy that shows strong growth with solid fundamentals. So still looking good on a relative basis, I would say, but on an absolute basis, some moderation is on the cards.
All right, some moderation on the cards. Thank you for joining in, Sonal, and sharing with us your take.
If you like this video, then like, share and subscribe to ET Now.